All right, guys. So global financial markets just wrapped up their best month of the year. We had seen that S&P 500 was up nearly 10% for July, which is the best we have seen since November of 2020. For crypto, it was much of the same. Crypto saw a return of almost 20%, which is the best we have seen since October 2021, when Bitcoin was just about to hit a record high of $69,000 per coin. So today's video, I want to talk about a couple of key changes in sentiment, technical analysis, as well as big news that has come out from institutions that is going to affect your holdings, whether you're in crypto or in the stock market. So if you enjoy that sort of content, I'd appreciate if you like the video, subscribe to the channel. So starting off with Bitcoin and the overall crypto market, we're seeing that the overall crypto market is still well above a $1 trillion market cap. Bitcoin has come down a little bit over the last 24 hours, but that's not important. What is important here is that Bitcoin on the 200-week moving average has finally had a close back above this 200-week moving average. This is very important because historically, Bitcoin has rarely ever seen a close below this 200-week moving average. So seeing that we did have about almost 2-3 weeks where Bitcoin was below it, that caused a lot of fear in the market, but now we are back on track. We are back above this 200-week moving average. Over the next week, we need to see another weekly close above this average in order to maintain this bullish outlook. And as long as that happens, as we see one more week above it, I am very bullish for the remainder of 2022. We saw that one of the top strategists, one of the top analysts in the world from Bloomberg came out and says that we are on our way to one of the greatest bull markets that crypto has ever seen. And he said this because we had seen that Bitcoin was below this 200-week moving average, well below the 100-week moving average for quite a while, almost a month. And since we had that point where people could start to accumulate Bitcoin, institutions could start getting involved, he said, since we were below that 200-week moving average for so long, he says now there were massive implications to see a huge recovery. He says for risk versus reward, he says it's tilted favorably, and he sees one of the greatest bull markets in history coming up. So this was Mike McGlone, who is Bloomberg's intelligence. He focuses on the crypto market. I want to quickly interrupt today's video to bring you a word from our channel partner, Fairdesk. Fairdesk is a cryptocurrency exchange that offers up to 125x leverage, and you can get up to a $5,040 deposit bonus by simply signing up using my link down below. Currently, Fairdesk is launching a new feature called Arena 2.0. It goes live on August 4th, 2022, and this feature is where you can earn money just by predicting the price of cryptocurrencies. If you predict the price of a crypto closer than someone else, then you could win thousands of dollars, as you can see with all of their giveaway prizes that they are giving out. The cool thing about this is that you can use your own money, or you could use coupons you get from simply spinning the wheel. There are 3 ways you could get free spins. One is by trading. For every $8,000 you trade, the user will get 1 free spin. 2 is by referring people. For every valid invitee, you will get another free spin. And the 3rd is by joining other events that they announce on social media, like on their Twitter or on their Telegram. Fairdesk is the only platform I have been using for trading my crypto when I'm using leverage trading over the last year. And Fairdesk's Arena 2.0 is definitely worth trying because you can win money for simply predicting crypto prices and guessing crypto prices better than someone else. Anyways, let me know your thoughts and let's get back to the program. Next thing I want to talk about is going to be with what's going on in the Crypto Fear and Greed Index. One thing to keep in mind is that Crypto Fear and Greed Index has still not come out of the fear territory. This does represent a little bit of more hope for bulls, because I would say that it shows us that yes, we have seen a recovery. Yes, we have seen Bitcoin go from 17,000 all the way to 23,000. But despite that, there's still a lot of fear in the market, meaning that if you were worried that maybe you could have gotten in a little lower, maybe you should have gotten in, a couple weeks ago, I would say it's still a great opportunity, because whenever you see fear in the market, that's usually the best time to be buying. If you look at historical trends, now many people have learned that, okay, when it starts to get to extreme greed, when we start seeing the Crypto Fear and Greed Index at that 80 level, maybe even 85. That is when you should be selling. But we're still in the fear territory, which is pretty good if you're still looking to accumulate more and more Bitcoin. Next thing I want to talk about is actually pretty interesting with stablecoins, because right now there's nearly $140 billion in stablecoins still waiting on the sidelines, getting ready to be dumped back into the crypto market. What you're seeing is that many people during that correction from 60,000 down to 20,000, they had been just stockpiling stablecoins. Think of this like fiat, it's like you want to sell your crypto, but you want to have it easily accessible to put back into the market. And right now what we're seeing, there's over $140 billion in stablecoins just waiting to be poured back into crypto. CEO of Binance, founder of Binance, CZ, he came out and says that, look, 3 of the top 10 cryptocurrencies are stablecoins, meaning that there's a lot of fiat in the sidelines ready to get back in. And if people want to get out of crypto, people wouldn't be holding stablecoins. So this is something that should make you extremely bullish, because as soon as people start deploying this capital, all of these stablecoins back into Bitcoin, Ethereum, many altcoins, we'll start seeing prices increase very, very quickly. And that is one of the main reasons why we were able to see, let's say, Ethereum rise from $1,000 per coin all the way up to $1,750 per coin in a matter of a week, because money is right there. It is just waiting on the sidelines, waiting for an opportunity to be put in. And as soon as people get a little bit of FOMO, as soon as people see prices rise a bit more, they're going to say, okay, we need to get back into the market. We need to pour all this money back in. And people who have been buying over the last few weeks, last few months, they're going to benefit greatly from that. Last couple things I want to talk about are going to be with institutions, because right now we have actually seen that institutions are getting back involved at a pretty substantial level. Crypto wallet maker Ledger, they work on cold storage and hardware wallets. Ledger is eyeing another $100 million funding round. And this is pretty important, because what we're seeing is that over the last 2 months, we saw a bit of a slowdown in funding for crypto companies. But now we're seeing companies start to get back involved, start to look to raise more money. And this should make you very bullish, because if you're seeing companies looking to raise $100 million, $200 million, or whatever they are doing, that would show you that, okay, institutions are starting to get a little more interested. They're starting to get back more involved. And all of these companies are thinking that now is the best time to be raising money, because they're preparing for the next wave, the next bull market. So that's pretty exciting. And in addition to Ledger, we have seen that BitGet has just launched a $200 million BTC USDT protection fund, which hints at investor-centric trend. What this means is that right now we're seeing that many companies are seeing a little bit of an uptick from retail investors, and they want to make sure that they are protected. They want to make sure that no more issues like what happened in the last bull market happened, where we saw many crypto companies fail, not have enough liquidity. That became a big issue. So what we're seeing is that BitGet chose to self-fund this entire $200 million fund, but now it's going to help protect investors moving forward. Last thing I want to talk about is going to be with Cardano. Many people have been asking me what is going on with Cardano, and as of right now, it's much of the same as what we spoke about in our last video. So I'll link that down below. But what we're seeing is that Cardano's Vasil hard fork has still been delayed for a few more weeks. We don't have a specific timeline, a definite timeline as to when it will roll out. But we have seen is that Cardano has come out and said that this is the most significant update that Cardano has ever seen. There are a lot of moving parts, a lot of dependencies, and they need to make sure things are done right, even if it takes a little bit longer for it to launch. They said the most important thing is security, making sure it's done right, making sure investors' funds are protected, making sure that there's no outages for Cardano's blockchain. So that is why they're taking a little bit more time, and ultimately, we're not in any rush. We're still seeing consolidation in the market. We're still seeing, we're still in like a bear market. We have not yet started to see FOMO, and Cardano has plenty of time. I would prefer them to take their time, make sure everything is done right, then rush something, and then people lose a little bit of confidence in the project. Because if you start seeing outages, you start seeing people's funds not being secure, that is a one-way ticket for investors to lose confidence in a project. So let me know your thoughts on what's going on with Cardano. I'll keep you updated as to when we have a specific timeline, but as of right now, we just know it's a few more weeks. Let me know your thoughts. Hope you enjoyed today's video, and I'll see you guys in the next episode. See ya.